currency market has had a lively start to the currency week. Traders have already appreciated the People's Bank of China's lower mortgage rates, weak factory sentiment in Japan, and Andrew Bailey's speech, which caused the Bank of England to revise its interest rate forecast, adding volatility to the euro and the British pound. These events beyond the currency markets and forced the US dollar index to cool down for a while. However, the US currency regained its lost ground and strengthened above 104.10 in anticipation of the FOMC minutes. Notably, the publication of the minutes may add volatility to major currencies. However, the minutes will reflect the latest data on inflation in the United States and will likely confirm that it's not time to cut rates. Be that as it may, the end of the week may give the markets more clarity on the future of interest rates, as there will be many speeches by central banks and reports that will reflect business sentiment in the major economies. In our video review, we will draw your attention to the most important macroeconomic data scheduled for this week. The full picture will help you build your trading strategy better. You are watching the Trader's Calendar. Reserve Bank of Australia Governor Michele Bullock will speak on Thursday. The Australian dollar has now strengthened above 0.6555, rising to a three-week high amid general weakness in the US dollar. The Reserve Bank of Australia's latest meeting minutes showed that policymakers discussed the possibility of another rate hike at their February meeting, but decided against it. Australia's central bank needs more time, and the board decided it was appropriate not to rule out another rate hike. Markets believe the tightening cycle is over, but see only a modest 36 basis point easing in 2024 in the second half of the year after August or September. Governor Bullock could either reinforce hopes for a late cut and strengthen the Aussie, or give traders new arguments in favor of a Reserve Bank of Australia rate reassessment. Traders will have to buckle up and gradually immerse in the economic sentiment of the European economies as soon as trading opens in Europe. Most of the attention will be focused on Germany. The German Chamber of Commerce and Industry surveyed more than 27,000 companies, and 35% expect business conditions to worsen over the next 12 months, with only 14% expecting an improvement. The bad mood among companies is becoming more entrenched, the companies said. Meanwhile, Germany remains an attractive location for new large-scale projects, following recent announcements of new plans for batteries, chips, cars, and pharmaceuticals. Earlier, the data showed that Germany's manufacturing PMI increased to 45.5 in January 2024, ahead of market expectations and the highest since February 2023, as the pace of decline in the new orders slowed significantly. Looking ahead to Thursday's data, analysts expect a further increase in the manufacturing index to 46.1 points. In addition, the forecast assumes an improvement in the services sector. If the figures turned out to be weaker, it may support the euro. At the same time, the euro paired against other currencies can behave unpredictably. Before markets receive data from Germany, there will be released France and Eurozone PMI data, which may complicate the formation of your trading strategy. After that, investors will turn to the data from the UK, and the UK is expected to lead the way in February, and will ahead of the Eurozone and even the United States, according to this week's monthly economic surveys. Economists are predicting that the UK's business activity index will fall to 42.7 from a 52.7 from a 52.9 in February due to an improvement in the services sector. This index may be the best among the leading economies despite the decline. If the forecast is correct, the pound will likely get an additional boost in February's upward movement. Otherwise, the British currency may retreat again. The US will round off the series of economic data reports. However, the US dollar may be influenced by the data on unemployment claims, which will be released earlier. Economic data on a higher US inflation and jobs, but weaker retail and industrial activity still has everyone in a wait-and-see mode. Therefore, the market will closely watch both reports. Economists are expecting a decline in the US business activity in both the manufacturing and services sectors. If the data beats expectations, the US dollar may receive an additional boost and regain its position against the basket of major currencies. By the end of the week, we will have less important macroeconomic data and the central bank speakers. Meanwhile, Germany will be in the spotlight again. First, the final estimates for the fourth quarter GDP growth will be released, and the German economy is expected to contract by 0.2% on a yearly basis. We should not expect surprises from this data, as the market is already considering the prospect of the first quarter results, and the picture is not rosy. On a Monday, the Bundesbank said the country was close to recession as external demand was weak, consumers remained cautious, and domestic investment was constrained by high borrowing costs. Output could decline again slightly in the first quarter of 2024. With a second consecutive decline in economic output, the German economy would be in a technical recession. The European Commission also noted that Germany would be the biggest drag on the Eurozone growth this year and the next. The German authorities approved an economic report on Wednesday that downgraded its economic growth forecast for 2024 to 0.2% from the previous 1.3%. In a broader context, the data for the fourth quarter could be weak. The IFO Business Climate Report could add to the picture of a current sentiment, and the indicator has fallen for 2 months in a row and is expected to fall again in February. Sentiment has reached its lowest level since May 2020. Companies have become more pessimistic about their expectations for the coming months and the current business situation. If the data is in line with the expectations, we will get further evidence of stagnation in Europe's largest economy and confirmation of a move towards a technical recession which could affect the euro. At the same time, the market reaction to the data may be short-lived, bringing high volatility, as it will be followed by speeches from Bundesbank officials. Until then, the picture will not be full. This was a brief overview of the most important economic events from InstaForex analysts. Follow us and make hefty profits from your trades, and see you online soon.